this week, sterling traders, you could be in for a very busy schedule. Starting off, we do have the Bank of England rate decision where they are expected to keep rates and policy unchanged. We did see quite a bit of a move in terms of GBP strength at the last meeting because the vote split was quite close actually. 5 were going for unchanged, but 3 actually wanted a hike. But in terms of development into this one, well, we've seen a cooling in inflation now, so that has taken some pressure off the Bank of England's shoulders. That's moved down to 2.6%, and we saw one of the members that was voting for a hike, Kirsten Forbes. She's now stepped down. It's the end of her term. So in terms of what to expect at this rate decision now, we're expecting for that to drop down to 6-2 in terms of vote split. So 6 wanting to keep that unchanged and only 2 for a hike this time. So that actually could in itself see the pound come off slightly. Attention will also be on the Bank of England's quarterly inflation report where they are expected to downgrade their GDP forecast again, another pound negative. However, these moves lower could quickly be reversed as the central bank are expected to actually raise their projections for their inflation, and they're actually seeing that overshooting their targeted level. It just depends how much, guys, they see that overshooting, and that will likely dictate the GBP strength or the level of bulls that we see going into the pound on the back of that. Elsewhere, we do have UK PMIs in the form of manufacturing, construction and services, which all make up a large percentage of the UK's GDP. Just as a reminder, the laggards at the last GDP reading for Q2 were manufacturing and the construction sector, so just bear that in mind. There could be a real tug of war between the bulls and the bears for GBP this week. Elsewhere, looking over in the United States of America, for the dollar then, we do have non-farm payrolls, so labour market data in focus. It's expected slightly softer this month at 180,000 roughly, down from 222,000 we saw last month. But the unemployment rate is also expected to tick lower, down to 4.3% from 4.4%. We have continued to see encouraging signs of the labour market. We've seen the steadily and continuous drop in the amount of people claiming unemployment benefits in the US. So it does look healthy. It does look like we could see some further encouraging numbers here this time round for the US. So could this be the stage of the pullback for the US dollar? As we know, we've seen a large amount of weakness across the board against a variety of its counterparts. If this data comes in nice and firm and strong and encouraging for the US, this could pose a stage or a pullback for the US dollar. But fuel, a lot of fuel would only be added to that if market participants see a pickup in inflation once again. As we know, it's very low at the moment in the US, but we're not going to see those numbers or the insight into those numbers until the following week. But nevertheless, we could see a stage of consolidation should these numbers prove to be impressive for the labour market in the US. Over in Australia then, in the outback, we do have the RBA rate decision where they are expected to keep rates and policy unchanged. Not expecting anything there. In terms of their tone, for them to remain a dovish neutral, as we've seen indications from the likes of the deputy and the governor of the RBA, who have shown a pretty much a dovish neutral stance in their recent rhetoric. What I would say is we've seen comments in the likes of the governor noting that further interest rate cuts are not likely to serve the Australian economy well, and that they don't want to move to start raising rates anytime soon in the likes of their peers that we've seen other global central banks tightening policy and raising rates. They're not in a position to do that at this time. What I would say is we have seen a lot of Australian dollar strength. They may start to become uncomfortable with that, guys. And as we know, as I've said time and time, they may look, I think at this meeting, they could look to talk that down now because as we know, it's gained quite considerably. So do not be surprised if we see that. Typically, when they do like to talk that down, we could see a move as much as 1 cent for the Aussie dollar lower. So do be very wary of that. There are many other key data points this week to be wary of in your calendar, guys, in the likes of Canadian and also New Zealand labour market data. So do keep an eye on the Dukascopy FX Market Freak Instagram account for all little previews heading into some of these other numbers that I haven't mentioned. So I do wish you the best of luck with your trading. Thank you.